Hello, good morning, good afternoon, good evening to everyone who is at COP and somewhere else around the world and watching us right now. Welcome to our session where we will be talking about financing adaptation for implementing 10 principles for effective action of the global ABC. I welcome our speakers as well, and will introduce them in 1 second. So to shortly introduce myself, my name is Bunafsha Muslimshoeva. I am working at Resilience, a consultancy engineering design company based in France, where we support our partners and clients on promoting climate change adaptation in the infrastructure sector and beyond. Karim, my colleague, will be also maybe saying 2-3 words more about us. Yes, we have limited time, and without further ado, I would like to highlight just a few things. So we will have an overview presentation by Karim Silwan, who will set the stage about this side event, and after that I will invite one by one our speakers who will also give their input on the financing adaptation topic. So I would like to introduce therefore Karim Silwan, who is the head of Resilience, an engineering office dedicated to climate change adaptation and resilience. He is a member of the Coalition for Climate Resilient Investment, and he was appointed to the Technical and Scientific Steering Committee and co-chair of the UNEP Global ABC. And actually, since this year, Karim has been a member or has been selected as a member of the Mission Board of Climate Change Adaptation of the European Commission. Karim, please, the floor is yours.
Yes, do you hear me? Perfect. Hello, everyone. Rapidly, my name is Karim Silwan, and I'm absolutely proud today to introduce you the 10 Principles for Effective Action, a call for action which was launched during the last COP26 in Glasgow. And now the most important challenge that we need to achieve is how to finance the adaptation for notably the 10 Principles for Effective Action. Because as you know, the more topics of this current COP27 is the loss and damage. And the loss and damage is absolutely linked with the 10 principles of effective action, notably with the number 9 dedicated to the finance. And now, I don't know if we could have the support the presentation to share the screen. Yes. Okay, well, the 10 principles for effective action, it's before to know that when we launched the 10 principles for effective action, the Global ABC Climate Change Adaptation Working Group was created 2 years ago with one focus. The focus was dedicated to notably to evaluate for the whole sector of construction and notably to integrate, to promote some focus on new building, retrofitting existing building, industrialized and emerging economy, integrating climate science, to centralize a lot of data and experience to achieve a new breakthrough concerning the building sector and construction sector. The next slide, please. As you know, the question was why we decided to create this working group dedicated to adaptation. We decided to create this new working group of adaptation because we thought that it's very important to align the mitigation action and the adaptation action to secure and to reduce the vulnerability in all building and construction sectors. Next slide, please. Now, the question is also the global ABC ambitious for building. We could summarize into 3 points. First of all, the Global ABC Works was dedicated to promote and to publish annual flagship publication, notably with the Global Statute Report for building and construction, regional guidance documents for decarbonization of built environments and construction sectors, with, for example, roadmap, Latin America, Africa, Asia in general, and the working group work area established to address key barriers to a low carbon, energy efficiency, and resilience building in construction sectors. Next slide. Now, why today we try to discuss about the finance, how we need to finance adaptation, because we are faced a new type of scenario, a new type of crisis facing climate change. As you know, the cities and buildings are more and more shocks and stresses due to climate change. In the same time, the cost of adaptation will be more and more expensive. And we are facing a new balance of power between insurance, financial institution, private bank, and the public institution. That's what we need to align to find a new solution to achieve together, to find the new financial mechanism to support the need of adaptation. The next slide. Is because the climate resilience should be asked than in dividends. How much cost and how much will it cost the private and public stakeholders if we don't tackle resilience? For example, the cost of dysfunction after a damage, the cost of emergency adaptation, the cost of insurance risk, the financial risk, notably with the capex and the opex, and the losing first mover position and the competitive advantage, notably for the territories and the assets. The next slide. This because we are facing this situation that we decided 2 years ago to launch the 10 principles for effective action for adaptation of the building sector of climate change. To be very simple action. For example, the first was urgency, act now. The stakeholders consider the systematic integration measure for adaptation across the entire value chain process to consider adaptation along the entire life cycle of assets. Mitigation, absolutely in tandem with mitigation decarbonization action. The data, we need to have an access of qualified data, but also with the open data, notably for the undeveloped country or the southern globe. For example, to understand the climate risk, so to have more information to build the most designed infrastructure, notably concerning the scale, which scale we need to analyze a best adaptation infrastructure, notably if we need to analyze the build scale, the neighborhood scale, or the city scale, for example. The question of the green solution than the nature-based solution. The population promote a just adaptation, so to be very inclusive. The finance system enable adaptation of the building sector, and the local reality fit adaptation measure to the local context. Next slide. Now, so to be more tangible with more tangible action, to be aligned with, to illustrate the 10 principles for effective action, for example, we need to be aligned with the mitigation as a prerequisite for the inefficient adaptation. We should be also aligned with structuring an holistic vision in the uncertainty climate change predictive scenario, than principle 2, 5, 6, and 9, for example. We need to build also a common generic framework, which can be used by the new building, but especially for renovation of existing building. Propose a multi-criteria global approach at the scale of building and development, including infrastructure, for example. The next slide. Also, the 10 principles for effective action are also aligned with the planning, services, and territorial cooperation through, for example, regulation, continuity of service, and degraded modes, territorial cooperation with a lot of local, national, regional administration. We need also to be aligned with studies and ecological diagnosis on the site, field diagnosis, studies and knowledge of the impact of the climate change specific to the territories, water, nature-based solution, and other natural resources. The next slide, please. Also, we need to analyze with the 10 principles for effective action the health of comfort for all, limitation of nuisance and pollution, the cooling solution, the accessibility of health service, for example, sanitary services, but also to reduce the risk of death, facing or during the heat wave event. The use and the behavior, because we know that a lot of technical solution could have the technical limits. That's why a big part of the adaptation solution could be supported by the behavior, by the users, notably through the mutualization of shared space, evacuation and shelter area, knowledge and information, etc. And now for the last tangible example, we need to analyze also with the 10 principles for effective action, the urban form and structures and components. For example, design option and construction method, adaptability and the reversibility, nature-based solution, and bioclimatism, design and architecture. But next slide, please. All the 10 principles for effective action, I repeat, should be aligning with the adaptation financing with built environment life cycle. What we mean when we speak about life cycle of built environment. We speak about the planning phase, design phase, construction phase, maintenance phase, and operation phase. This is a loop system, absolutely loop system, because in each step, we need to reevaluate with a new update information to restress or to rethink regarding a new context of the climate. So to be sure that the finance should be aligned with the new climate context during all the life cycle of building. Now, I invite you to read the 10 principle number 9 dedicated to finance with the enable adaptation of building sectors. The question, and after it should be open with the other panelists, is how we could imagine a new mechanism to support this finance of adaptation. It should be, the next slide, it should be a line, for example, it should be characterized or determined with a new innovative financial engineering for PPP, private-public partnership, integrated climate change adaptation. When we speak about PPP, it's not only for the big project, it should be also with the local project, with the local stakeholders. It could be with the local administration, in the same time with the national institution when we speak about the big infrastructure operate or supervised by the national authorities. While we discuss about a new mechanism of financial system to support or to finance adaptation, notably during the project identification in among process, it should be also during the project preparation phase, it should be also during the procurement phase and during the implementation and the contract management phase. In the other world, we are sure that we need to rethink the new mechanism, notably including the PPPs and a priority inside the project during all the steps of the PPP. It should be a way and also to question who want to support, who want to share the responsibility to reduce the risk, but also during a period of uncertainty regarding the future climate context. To conclude, the financial adaptation must be systematically considering alongside mitigation finance, notably because we need to make in tandem, I repeat, the address climate change adaptation and mitigation issues in investment policy statements. To support development of climate change adaptation and mitigation related to metric and analysis, assess the capabilities of internal and external investment manager to incorporate climate change adaptation and mitigation issue, ask investment services provider to integrate climate change adaptation and mitigation factors into involving research of analysis, encourage all academic and other research on this theme to be part, to support, or to create new index, new KPI to determine the new financial mechanism to support adaptation. And also, that's what we are here today, to promote the advocacy to accelerate the new mechanisms in tandem with adaptation and mitigation. To conclude, this is my last slide. Next one, yes. Adaptation finance can save the world from climate change because it has now become an agency to increase funding in the context and uncertainty climate change scenarios. And it's the only way forward if we are to pursue true global sustainable development. In the other world, this is illusory to discuss austerity plan or impose cut of public spending when facing the needs to invest in climate change adaptation. In the other world, it's impossible to achieve a sustainable world without adaptation. That's why today we need to discuss with the other panelists some new mechanism and idea dedicated to adaptation finance. Thank you.
Thank you very much, Karim, for this overview of the 10 principles of the global ABC, and I'm sure we will get back to them, especially to number 9 on financing after we had the round of inputs from colleagues. So hereby I would like to hand over to Mr. Omid Saberi, who is the global lead for the Building Resilience Index program and the global technical lead for the International Financial Corporation, so IFC, Edge Green Building Program. He has extensive experience in the World Bank Group, including IFC investment and advisory projects. And we are happy to welcome you, Omid. Please, the floor is yours.
Thank you so much, and glad to be here. It's an honor. Fantastic to see the colleagues here that are, talking resilience, because resilience has been a subject that, as all of us know, is not getting enough attention as mitigation, and that's really important for all of us to come up with solutions on what to do to improve our development in resilience. As you said, I work with IFC. IFC is one of the largest development banks in the world and supports development of climate-friendly investments around the world. We have been working on different elements of buildings, including the Green Building Program on EDGE. And last 3 years, we started working with on Building Resilience Index. I'm also a co-chair in the Global Alliance for Buildings and Construction on the finance working group, and we are working on adaptation and finance, and hopefully these two come together closer. What I'd like to start with is I want to start with the real case storyline, and let's try to imagine this scenario, right? Let's imagine you're meeting with a developer or a builder that wants to build a residential project somewhere in Africa, in Egypt, let's say in Egypt, right? Because COP is in Egypt. And let's try to understand what this means from resilience point of view and how this scenario can play out, right? I'm going and meeting the CEO and Mr. CEO, we'd like you to develop your project much more resilience. And from CEO's point of view, let's understand what they would ask. To me, the first question they would ask is very basic question. What does resilience mean? What do I need to do, right? So that's the first question that everyone would ask. And for us to answer that question, we need to start with definitions, right? How are we going to define resilience? And defining resilience obviously is not the same in Egypt than in France and than in Philippines. Every country would have their own definitions of how do we need to define resilience. Second question is that, is there only one level of resilience, or do we have different levels, right? Do we have only, we do something and then resilience is all done, or it changes over time? So we have to also come up with levels as well as the definition over time, right? So that would be our second piece of work that we need to define. But the second question that they would ask, and I have seen this asked over and over and over, is how much would it cost? And it's really important for us to have an answer to that question as well, because unless they know how much it would cost, you can't really buy something if you don't know how much it costs, right? So that's the second question we need to figure out. So based on the definition, we have to come up with what is the delta cost between business as usual to a more resilient building. And that cost obviously is not the same in Egypt to Philippines and in Egypt to Nigeria. Each country would have based on the definition and based on the country's conditions, would have different cost structure. So that's the second piece of puzzle that we have to solve. And once we solve that piece, let's say if the cost of construction is $1,000, let's assume that there would be 5% increase in the cost of construction. So once we understand that, the third piece is who is going to pay for it? And that's a very important question to ask. I mean, again, from a developer point of view, what they want to do, obviously, is to build the construction as cost-effective as possible, because for them, increased cost means loss of profits, right? And from their point of view, when they meet the building codes in each country, that's all they need to do. When you meet the building code, you can pass, get the permits, sell the housing. The question is that why someone needs to go beyond the building code and make the building more resilient, right? And that's where these programs come together of what do we need to do? As Karim said, who we need to train, who is gonna pay for that extra cost. So let's discuss on who's gonna pay, and that's the financing piece, right? So if you look at the players in the game, there is government. Can government pay for these extra costs? Governments normally say, no, we don't have budget to pay. If you go to the banks and say, CIB Bank in Egypt, would you be able to pay for additional costs of resilience? And the answer from them would be no, we don't have budget to pay. If you go to insurance companies will not also pay because they would feel that the payment would not be, insurance says, no, we cannot cover costs of construction, extra construction. And the home buyer would not pay for it as well, because home buyer feels that paying extra costs is difficult. So nobody wants to pay for cost of resilience. However, look at the scenario after an event happens, right? Let's say a flood comes and the same residential building that was built gets flooded. Who is going to pay for it? Government needs to pay for the infrastructure lost. Insurance needs to pay for it. The financial institutions would be in loss because their assets would be in loss. And the home buyer would pay from their pockets as well. So it seems like that everyone would pay if the event happens, but nobody wants to pay before the event happens, right? So that's where the puzzle starts. And our role as IFC or other colleagues here like EBRD is to try to solve the puzzle of what are we going to do for these players to come and play their roles before the event. And to do that, it's not impossible. In one hand, we have global donors that they really need their money to be diverted toward climate action, including adaptation. And we know that investment in adaptation has been roughly less than 5% of investment in mitigation. So there is a lot more room to grow on adaptation. What would be a solution is that we can bring everyone to play a little bit of their share in this game. For example, government can come with incentive programs to say, if the buildings are resilient, I'm going to give you a faster permit and I'm going to give you a bit of tax reduction, not too much. Banks can come and say, we can give you a bit of reduction in construction finance and mortgages. And we get this money from donors to cover those delta between the interest rate for construction finance and interest rate for green mortgages or resilient mortgages. The home buyers, probably they would buy faster. So it's an incentive for developer to sell these homes faster because they are more resilient. And insurance can reduce the insurance rate because these homes are more resilient. Now, if we look at this scenario, everyone would pay a small share, but at the end, everyone would benefit from this situation. Have this done before on resilience? Probably not. But has there been similar scenarios? Yes, there has been similar scenarios on other sectors. Example, can you imagine in a country within 5 years, let's say in Egypt, within 5 years, we would have 20% of all new construction to be resilient? It feels impossible, but this has happened in Colombia. We started in Colombia in 5 years, 20% of the market became green. The reason that became green because exactly the same story. Government paid, government provided incentives, banks provided lower interest rates, insurance provided less premiums on the insurance on green buildings. And we have the construction sector following that. And there are 5 banks that are providing green mortgages and green construction finance. So with these elements together, within 5 years, market transformed. So hopefully we can do the same on resilience together. We can come together, and within the 10 principles, if we look at 10 principles, a lot of these things are stakeholders, process, data, finance, and training people. With all these pieces together, we would be able to move the market toward more resilience conditions. I'm going to stop here and hand it back to you.
Thank you very much, Mr. Saberi. Indeed, these are very crucial questions that you have raised there, and also answered to many of them through the example of Colombia. I think, yeah, some of them, we definitely come back to them during the discussion, and they will also shape, yeah, the entire side event. So we definitely try to address them. I would like to invite our next presenter, Mrs. Sarah Doof, who is the Climate Adaptation and Resilience Expert at the European Bank of Reconstruction and Development. Sarah, I would like to give the floor to you. Please introduce yourself and your work. Thank you.
Many thanks, Bashar, for now. Yeah, so my name is Sarah Duff. I'm a climate adaptation and resilience specialist at the European Bank of Reconstruction and Development, which, like IFC, is another one of the multilateral development banks around the world. And similarly to IFC, we also both have a private sector focus. So our banks look at how we can involve the private sector and how we can kind of enable the market around the world. And one of our key principles at EBRD is the green economy transition, and that includes climate adaptation and resilience. And so the way that we kind of mainstream climate adaptation and resilience into our operations at the bank is on 3 main pillars. So the first is through aligning our operations with the Paris Agreement, both the mitigation and the adaptation goals. Secondly, through disclosing climate-related financial risks, both transition risks and physical climate risks. And thirdly, through tracking climate adaptation finance in the projects that we support and in our investments. And so far, when it comes to our climate adaptation finance, it is significantly smaller than the climate mitigation finance, which I think is a similar situation for most banks. But I would say that approximately 80% of that finance has been in the infrastructure sectors. So we've done a lot of investments in large-scale critical infrastructure, the infrastructure systems and the networks, and particularly in water, energy, and transport. And also, we have a big focus on cities through our EBRD Green Cities program, and that supports cities in assessing and addressing the priority environmental challenges, including adaptation, because we recognize that a lot of our cities are exposed to physical climate risks, and sort of enhancing their resilience can be very beneficial for residents and people living in the cities. So there's also big incentives in that program for adaptation investments. When it comes to buildings, actually our buildings projects, and they are very varied, it hasn't actually attracted or delivered as much adaptation finance as the large scale infrastructure. And I think that's for a number of reasons, which really links back to the 10 principles. And we can I'll touch on those in a moment. But like I said, our buildings projects are very varied. We do investments with corporates through, say, logistics parks or agriculture investments, sort of the buildings that are linked to agriculture processes and the food value chain. Also with our municipal and manufacturing and services clients. And real estate, we do lots of sort of green property funds and large-scale real estate redevelopments. Also with municipalities, as I mentioned, through our Green Cities programs and through other financial intermediaries, through our green economy financing facilities. And as part of that, we have a technology selector, which has specific climate adaptation and climate resilience technologies that can be deployed on a very small scale to individual buildings and its sort of individual assets within buildings. I think adaptation in the building sector, and I think this is where I might be a little bit controversial compared to what Omid has said. I actually think it can be very simple and easy and quite you can get a lot of quick wins, especially if you follow a lot of the principles that are in these 10 principles, and really mainstream adaptation into how buildings are developed and implemented and managed and operated throughout their whole life cycles. I think one thing that's key is the process point of how considering adaptation along the entire life cycle of an asset, because adaptation is a process and it needs to be integrated into how the life cycles and the planning of how buildings are developed. Also with mitigation and the point there on point 4 about mitigation and how adaptation and mitigation activities should be implemented in tandem. If for example, you're kind of increasing the insulation of a building, that has benefits when it comes to mitigation in terms of reducing emissions from heating or cooling the building, but also it has the benefits in terms of adaptation about making that building more resilient to increasing temperatures, making the residents inside the building, the occupants, more able to cope, making the thermal comfort of the building better. So there's a lot of things that can kind of quick wins, things that are easily done. Also in terms of the point on scale, thinking beyond just the asset level and looking at the broader picture of sort of where buildings are located, how they're managed in the context of cities, and those things are kind of I say easy to implement. Obviously it's not that easy because we're at the stage where we're still talking about what does adaptation in buildings look like. But I think there's still a lot of things that can be done, which they're maybe small interventions, but they can have a big impact. And they may be on an asset or a building level, the impacts are quite small. But then when they're delivered at scale, when they're done throughout the entire building stock of a city or the entire building portfolio of a client, that has a very big impact. For example, water saving technologies. I mean, if you install one water saving toilet or tap, it's not going to have that much of an impact. But if you do it across an entire city or entire portfolio of buildings, it is going to save a lot of water. And then I think that's when it becomes quite difficult to see, because this is where I see that we have maybe had less of a ability to track the financing in these sorts of investments, because they're such small interventions and because it's not necessarily very easy to see the difference between what is an adapted building and what is a standard, what we used to call business as usual. But that business as usual has changed with climate change and with adaptation. And if we've built in adaptation right from the beginning of how a project was developed, that the adapted building is now the sort of business as usual. So picking out what the additional cost would be, as Omar was talking about, is very, very difficult, because what is your baseline? Are you going with the old building codes of the past, or are you kind of looking at the future and how they're being updated now? Why would you build a building that is not resilient? And then once you've got to the end, add in some adaptation measures, only then would you be able to see the cost. If you've just designed and kind of factored these things in right from the start, then there would not necessarily be an additional cost. And then it's hard to say, okay, well, what is the adaptation in this building? And here, I think it's important not to look only just at the finance and how much money is provided, but what the outcome of that is and how that is improving resilience, and what then does resilience look like. For us, we try to, as well as tracking our finance, as I mentioned, we try to also track the outcomes, and we look at things like improved human health and productivity within a building. Are the occupants able to, do they live longer lives? Are they having, are they more productive? Are they able to work during heat waves? We look at reduced disruption. If there's a flood and it means that a factory goes out of business or out of production for a week, how much does that cost to the business of the company? Same with reduced damage. So we look and see, okay, if you increase the resilience of a building, does that mean that the assets will live longer? They'll need less maintenance. They'll be less impacted by extreme weather events. And we look also at water savings in a water stress context. Are we able to save water with the measures that we're implementing into projects? But even then, the scale is important, and individual buildings and individual assets, they can only achieve so much. As I said, the water saved from one tap is not a significant amount, but like if you deliver all those small actions as part of a bigger fund, so like a PPP for residential real estate development, or for a large scale building fund, or on a city scale, then it's going to have much more of an impact. And so going back to the points again, looking at the finance one, from the 10 principles, I think that's where we need to start. So looking at the finance, and the point is just to ensure that projects are not developed that don't integrate adaptation measures. And that for us is the same level as aligning our objectives, our operations with the Paris Agreement. We wouldn't invest in projects that have identified that there are risks and that they haven't done anything about it. We need to see what kind of measures have been integrated to be able to address those risks. And then that addresses a lot of the issues, but then we also need to look and see how can we go further and address opportunities as well as risks, and see kind of opportunities to actually invest in kind of not just new investments for making sure that they're able to cope, but how can we kind of retrofit old buildings with adaptation measures? How can we kind of improve the whole building stock? How can we do more to provide dedicated finance for going the extra mile, rather than just sort of saying, okay, everything is okay and everything is protected and it's going to be all right. That's wonderful. That's perfect. But then we also need to do more when it comes to adaptation. So with that, I think I'll kind of hand the floor back, and then we can continue the discussion in the panel conversation.
Thank you so much, Sarah. Amazing. Very, very also important, crucial questions. We will also, reflect them against the ones that were raised by Karima and Omid before. So it will be, I'm looking forward to this discussion. And I would like to welcome now our final speaker. That's Mr. Sébastien Solé, who is the Global Head of the Energy Transition and the Environment at the BNP Paribas. And he is also a member of the Task Force on Nature-Related Financial Disclosure, and that was also partly addressed by Sarah. Sébastien, the floor is yours. Please give us your insights. Thank you.
Thank you. Good afternoon, everybody. Yes, I will go on my experience as within BNP Paribas, the banking industry, to comment and to put forward 3 of the 10 ABC principles. So the first one I would like to highlight is the fourth one, and it comes back to what Karim said earlier. Financing adaptation must be systematically considered alongside mitigation finance. I strongly agree with this. As a financial institution, one thing I really know about adaptation and mitigation is that both things will be made very, 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 very expensive, especially in the real estate sector. So we need to make our best to optimize the financing on this and to optimize as much as possible mitigation and adaptation. And in the end, in many, many cases, adaptation and mitigation is very convergent, because what you have to do is to make sure that your building is as adapted to its overall context as possible, meaning that you have to do as few heating and cooling as possible to make sure that you optimize the temperatures outside the building to make the building comfortable. So obviously, during decades or during years, we built a lot of glass buildings, very beautiful, but that were very hot in summer, very cold in winter. And so typically, this kind of buildings, it's not good for mitigation, it's not good for adaptation. So we have to make the best of what the nature provides us, and to make buildings that are as energy efficient as possible. On this slide, okay, you can see a few European statistics. It's not possible to, yes, the slide is quite, is not very visible, but on the, each line is a country, European country, and in dark green, you have the buildings now that are considered as energy efficient. And so in 2050, all the buildings should be dark green. So you can see that there is a lot of work to do to make buildings in Europe. And so in other parts of the world, it can be even more difficult. So we have a lot of work to do to make the existing buildings energy efficient, to be able to address both mitigation and adaptation. Next slide, please. So the second principle, ABC principle, that is very close to my heart, is understand climate risk data and accept uncertainty. A banker, the main role of the core business of a banker is to assess risk and to make sure that what we finance will face in the coming years as low risk as possible. And so one thing that is very important for us is to be able to assess, for instance, the climate risk, the physical risk that the buildings we finance will face. It's very important for us, but it's very tricky because for the time being, it's very difficult to get relevant data on both on the precise location of what we finance. When we finance a big real estate company, it's not always possible to get the real data on the precise location of all the buildings in its portfolio. And the second thing we try to know as much as possible is the physical risk that each of its buildings will face in the future. So it can be heat waves, it can be floods, it can be these things. But for us to assess and monitor our credit portfolio and to be able to make sure that the risk are as low as possible, we need relevant climate risk data, and it's quite difficult to have. So we need really to work more and more collectively to gather all the relevant data we need to assess climate risk. And third, next slide, please. So the other principle, yes, that in BNP Paribas we are very, very interested in is consider nature-based solution. So on this slide, you can see two photographs on metal 57. So it's an example but it's a new building, renovation actually. It's a renovation building that is now the headquarters of BNP Paribas Real Estate, our subsidiary specialized in real estate. And they decided to be as exemplary as possible to make sure to implement all the good practices they have in catalog. And so a lot of these solutions are related to nature-based solutions. So it was an old building in a built environment, so with no nature, more or less. And so they implemented many nature-based solutions. So firstly, they put really nature at the core, at the center of this building with a new park. On the tops and the roof, there are green rooftops to make sure that the building is in nature and covered with nature. They use specific glasses, specific windows to make sure that birds will be able to see these windows. Otherwise, there is a risk that these birds could crash on these windows. They implemented some kind of nature-based solution to make sure that local insects and birds should be quite happy on these buildings. So it remains a buildings, but it's as integrated, as embedded in the environmental, in the nature outside the building as possible to make sure that the city and the nature can coexist in yes, and it's better for nature and it's better for the building as well, because the more you embed such building within nature, the more adaptation really it is, because the temperature within the building most of the time are lower in the summer, thanks to the nature-based solutions that are being implemented. So it's very positive for biodiversity, and it's very positive for the adaptations of the building. So it's only 3 examples for 3 of these principles, but definitely we need really to make really progresses on adaptation, because for the time being, unfortunately, adaptation is not considered as it should be when we design a new building or when we renovate an existing one. Thank you.
Thank you so much, Sebastian. Also important question. Yeah, that not all the new buildings are taking resilience into account. I would like to, so we have 10 more minutes, maybe we could spend 5, 6 on a few questions that I heard through the different inputs. So on one side, it is stated that investing in built environment is actually relatively easy. There are lots of quick wins if it is done at a large scale. But on the other side, we heard from Omid that it is actually not so easy at all, because governments, banks, insurance companies, the buyers, they have all their reasons why they don't invest before the event. So I would like to maybe invite Sarah and Omid just to reflect on these 2 very different perspectives, where one sounds to be relatively easy at a scale with quick win, and on the other side, we actually don't have so many examples. So Omid brought one from Colombia, but why then we don't implement adaptation at scale if that would have been easy? So maybe that's more the question. If you would like to take 1-2 minutes to reflect on that, Omid and Sarah, what is your take here?
Maybe you start and I'll follow you.
Yeah, sure. I think, okay, it's obviously not easy. Otherwise, we would be doing it as a standard, right? I think what I mean is that if we follow the principles, if we look at start right from the early stage, if we build it in right from the beginning, then it doesn't look so difficult. It's already embedded, it's already mainstreamed, it's something that is being delivered through the buildings, as opposed to being a kind of add-on or an expensive measure. And then of course it is then difficult to have those conversations if you're with building owners, with governments, if you're saying, okay, look, you've got this project and you've already developed it, and we now think you know climate change is here, you've got to add X, Y, Z. That's a lot harder of a conversation than if it's kind of developed and it's implemented from the beginning. But then you might not necessarily see that that's adaptation, because you've just built a building that is resilient, and you haven't necessarily. So adaptation is a process, and so you don't necessarily see the components that are adaptation measures, and so therefore it's difficult to see where the finance is in that example. But it is something that can be done.
Yeah, I would add to what Sarah said in terms of, you know, the players. What really matters is alignment of incentives, right? So let's say if you're an engineer and you need to design your building from the day one, a better building, why would you do that? And what is the benefit for you, right? So what we need to do is to train those engineers from early days, either in the schools or as professionals, to train them. So the training is critical. The second piece would be to understand what it takes for the developers to adopt these practices, to go beyond the code. A lot of countries that we work in, if you go to these countries, either the building code does not exist, or even if the building code exists, I'm talking about emerging markets, the building code has not been implemented quite well, or even they claim that it's been implemented, but when you go to the site, the inspection or implementation is not very, very good. So the Building Resilience Index program that we are working on tries to solve these pieces, right? Tries to come up with a verification that would be third-party verification with 2 licensed engineers that are trained. There would be certain measures that can be implemented, and each measure would have its own cost. So it's very transparent and easy to understand. And there would be banks that provide better financing to those assets. So as a package, when you put, and also insurance companies to provide better insurance rates. So Building Resilience Index kind of tries to tackle all these pieces together. It's, in principle, it's easy, but the devil is in the detail. When you go to the actual implementation, all of these things takes ages. But step by step, we can work together with data transparency, with building everyone together, coming everyone together, and training the players. Hopefully, we can move the needle forward.
Thank you so much. And maybe just a very related question to Sebastian, Sarah, and Omid. To what extent, in your opinion, it is realistic that banks, because they are obviously one of the really biggest investors in the building sector, to what extent is it realistic that they make resilience and integrated adaptation, what also Sarah mentioned, they invest in projects which had identified their risk and which included adaptation or resilience measures in their project. So to what extent is it really realistic that it becomes a precondition in the financial institutions, and thus we kind of make sure that adaptation is included? And a follow-up question to Karim, because you work a lot with governments. To what extent, Omid said that, for example, the building code is not really existing in every country, but in the ones that you worked and the ones where it exists, to what extent it is possible from the government side to also set some preconditions and say, if we need to reach adaptation at scale in our built environment, we need to force companies to follow certain rules? Is it a wishful thinking, or is it something you think could be and should be implemented in the coming years? So 2 different questions, one to the financial institutions colleague and one to Karim. So how much how realistic is it from the financial the institution side, and how much is it realistic from the. Feel free, please, to jump in, start. Thank you.
If I may, the first question, yes, I think it's realistic, perhaps not today, but quite soon, because actually for the time being, we lack data. So it's very difficult to model precisely the costs that will occur in a case when a building is not resilient enough, because yes, climate change is getting worse and worse. So we know that the impacts of climate change will be worse in 5 years than now, but we don't have the data yet, and we don't know exactly how to model this future risk inside our current models. So, but the more data we will get, the more prospective data we will get, the more we will be able to assess exactly what would be the cost of a non-resilient building, and the more we will integrate this resilience programs in the financing of new buildings. I think so. I hope.
Thank you so much, Sebastian. I would, if you don't mind, hand over to Karim quickly. Really 1-2 sentences on the government.
Rapidly. Yes, thank you very much. But rapidly to conclude my position here is, I think we need to make a new building breakthrough, because the climate change adaptation asks a new vision, a new type of design, and a new mechanisms to finance the adaptation. Your question was about the same index, same standard. Perhaps we have not discovered all the type of solution. We need to still absolutely agile, because sometimes you could have some good idea today, but it could be absolutely obsolete in the future. That's what we need to take care about this changing, because all the climates, all the environment, all the built environments are in changing movements, and we need to be absolutely aligned. I know that it's not easy, but the solution today, it will be absolutely, it should be, it could be not relevant for the future. That's what we need to make the both, some equilibrium, some balance of power between the advantage, opportunity, and the limits. And I think the key of the solution is to find a new financial model, because without money, I think it's impossible to encourage the national government, notably for the global south, and to also to rebuild a new type of PPP, to share the responsibility and the risk, facing this urgency to answer the need of built environments, housing, etc.
Thank you, Karim. And I think with that also you answered the question that we had in the chat, that we still maybe need to, it's not that we have now one standard and everything is fixed. Standard development and application is really a process. And this was also the question in the chat. So yeah, what will be the next step basically with this standard? Yeah, so we have really a few seconds left. I would like to thank you everyone, although it would have been great to have a longer discussion. There are lots of questions on my list, but yes, maybe in the next occasion. So thank you so much. Thank you very much to everyone who joined us in this session, and I wish everyone good luck at the COP and everywhere. Thank you so much.
Thank you.
Thank you. Bye-bye.